Hey, everybody. Dan Fitzpatrick here on the Fitz and Five or chart of the day, whatever you want to call it. I want to look at CROX today. Now, they report earnings in a few days. It's Thursday after the close, so we got 3 more trading days for this stock to move. I put us in this stock as an active trade back here on the 30th. So it's been a few weeks when the stock first started jumping up here on heavier than average volume. And we were able to hold through this pullback. I'd set the stop just a little bit below where the stock ultimately went down. And it could have been shaken out. We weren't this time around, but I happened to just set the stop a little bit below here. So we stayed in through the pullback here, and then rode this thing up. And so now we're up about 21% on the trade. Really big volume here, which I like. It does, it makes me pay extra attention to tomorrow. And this is why I think this is up like 10 of 11 days, something like that. 10 out of 11 days, this is up. And we get this kind of volume. I wouldn't call it a crescendo, so to speak, but you can see it is noticeably higher than the average volume over the last 20 days. And so it's possible that this could be kind of even a climax high. And I mean this in a very, very short term, sense. You can see the takeoff here continues to go on the 15-minute chart. It's just running in a really nice direction and a really nice slope, but it does get my attention that it's so high volume-wise and up almost 3% after a big run here. So I would suggest being really careful with this. If you are in this stock as a Stock Market Mentor member, I've already told you what I would do this morning in this morning's webinar. But if you're a short-term guy, then you might want to do this to protect your gains. The low here is 146.68. So if you were to even put your stop just a little bit below today's low, that will keep you in the stock until and unless the stock reverses completely the prior day's gains. In other words, if you look at what's been happening here, the stock has repeatedly been making higher intraday lows. So each day the stock has not come down, even on the worst print, below the prior days. So, and that's certainly what we have here. So the thing that you would be doing is you would be staying in this stock until and unless the stock did that. You'd stay in it, and you ride that thing higher and higher until, at least the way I would trade it, the way I am going to trade it, is to hold until before earnings. And then I'll sell half. I'll sell half of my position, hold the rest over earnings. And, we'll see what happens. As I look at this chart, this looks like a big old multi-year cup and handle with the low handle. I could definitely make the case for this thing coming up to 180. So anyway, that's my trade for you. By the way, members, pay attention to this morning's video. I said a lot about our various trades that we have on. And if you're not a member of Stock Market Mentor, you may want to check that out. I've also got a special promotion going on right now to sign up for Option Market Mentor. But at this particular point in time, it's only available for Stock Market Mentor members. So you may want to check that out. Go to the website, see if you like it. It's a trial. So you get 2 weeks, I think, for $7. Personally, I think that's a pretty good trade, though I do get a free subscription to Stock Market Mentor and Option Market Mentor too, which is nice.